Hello, I'm Bernard Hickey for interest.co.nz and welcome to the investment report. Today, some big news from Tower, which has closed down its Mortgage Plus fund. This fund had $242 million. It was invested in first mortgages on commercial and residential property. The closure of this fund shows how serious the slowdown in the property market is going and how much of an impact the subprime crisis is having. Tower says that it decided to close the fund because it had seen a rush of redemptions in recent weeks and expected that within a couple of months, the $22 million worth of cash that it had on hand would have been wiped out by these redemptions. So it's decided to close the fund now so it can preserve the assets. It will now wind down that fund. It will wait for the loans to either be paid back or will sell those loans on to others. Currently, the $242 million is split about 60% in residential property and about 15 to 20% in commercial property. And what Tower has seen in the last month or two is a big increase in the amount of arrears on those mortgages. That's up to 9.1%, which is a really surprising number. What's happened here is that Trustees Executors, who actually owns and administers the funds, has sold mortgages or lent mortgages out to people through mortgage brokers. And it appears they may have scraped the bottom of the barrel. A 9.1% arrears rate is very weak. What does this mean for investors? Well, this is the second of the big funds to announce that the subprime crisis and the real estate property slowdown is affecting them. ING, you might recall, a couple of weeks ago decided to shut two of its funds. They were exposed more directly to the subprime crisis in the States, but this is really interesting because it brings it much closer to home. These were residential and commercial mortgages linked to our housing market, and now Tower has closed it down. This was its biggest retail fund with $242 million and nearly 4,000 investors involved. This is a big blow for the managed funds industry coming so soon after the ING shutdowns. It could take years for people to get their money back. There's only about $90 million of this money which is due to come back in the next year or so. Tower will try to sell those mortgages to others, but to be frank, it is a book that is in a bit of trouble with a 9.1% arrears rate. So another blow for investors. I'm Bernard Hickey from interest.co.nz and that was the investing report.